Welcome back to another GT Homes exclusive. As we enter into a new year, many investors are left wondering how the pandemic's lasting effects will change the real estate market in 2022. If we look at the trends when COVID-19 first started, we can see that the real estate market began to rebound in May of 2020. Despite the pandemic, there was still a high demand for buyers to enter the market. And because of that, the housing market saw a record-breaking year in 2021. Last year, the pre-construction condominium sales totaled 30,825 units, increasing 69% from 2020. And pricing for unsold new condo units averaged at $1,324 per square foot, increasing 18% annually. This was the fastest pace of appreciation for new condo prices since 2018. So what can we expect this year? Recently, Deputy Chief Economist for CIBC, Benjamin Tall, made his predictions about the housing market for 2022. Overall, his consensus is that we will continue to see higher prices in both the resale and pre-construction condo markets. To support his conclusion, Benjamin Tall mentioned three key points in his analysis. The first is supply and demand. Many factors contribute to higher house prices, but it boils down to a very little supply and high demand. This demand comes from immigration, first-time home buyers, and renters looking to live close to transit or their place of employment. In fact, the government is expecting to see a surge in population over the next few years, with most of the growth coming from immigration. With all of this demand, developers are focused on building condominiums because they house more residents than low-rise homes. However, it's important to remember that it can take developers approximately a decade before they can deliver their product to consumers. Building a condominium is a long process. From the time developers acquire land, get their proposal approved by the municipality, and build a condominium, this alone can sometimes be a 10 to 15-year process depending on the size of the condominium and location. This means that the supply can't keep up with the demand. Benjamin Tall also states that the prices won't slow down this year because of the high demand and low supply. And with the expected surge in population, these prices may only continue to increase. The second contribution factor is rental rates. With border restriction loosening, Benjamin Tall estimates that approximately 410,000 immigrants will be coming into the country annually. Once newcomers settle in, Benjamin Tall expects them to rent a home for 3 to 4 years before entering the real estate market. With this demand and tight supply, rental rates now surpass pre-pandemic levels for the first time since January 2020. Due to the inflating real estate prices and high rental demand, we may start to see a shift from the number of renters versus the number of homeowners. Soon, these numbers may resemble those of New York, where 35% of people are homeowners and 65% are renters. This shift in the rental market gives investors more reason to buy now to take advantage of the growing real estate market. Finally, the third contribution factor is price. Benjamin Tall states that one of the reasons the activity was so strong was because there was a sense of urgency to get into the market when interest rates were low. Also, parents are encouraging their kids to get into the real estate market by helping them financially. In fact, Benjamin Tall states that gifting is up by 20 to 30%, which means the parents are gifting their children the amount or partial amount for their down payment to get their kids into the market. It's clear that many people were trying to get into the market when prices and interest rates were more affordable. Now we have reached a price resistance, especially in low-rise housing, which means many people simply can't afford low-rise homes despite the low interest rates. Mr. Tall states that many investors will start buying pre-construction condos because of their affordability compared to low-rise homes. Based on these findings, Mr. Tall believes that the condo market will outperform low-rise homes over the next 6 to 12 months, especially in the city of Toronto, as more people go back to work. So what does all this mean for this year? As we see the shift from prices increasing due to low supply, high demand, and affordability, it is important for you as an investor to get into the pre-construction market now. Only then you will set yourself up for success and potentially avoid future inflation. We know that prices will only continue to inflate, leaving investors with less of an opportunity to get into the pre-construction condo market as the year progresses. When you buy now, you will not only see the value of your investment gradually increase, but you can also rent out your unit to tenants while you watch your investment grow. At GTA Homes, we pride ourselves on educating our clients about the pre-construction condo market. By asking the right questions, you can be confident that you're making the right decision about your investment. This has been another GT Homes exclusive. Remember to subscribe and to visit us at gtahomes.com.